We're on express elevator to hell. Going down.
2, 1, mark.
What is going on YouTube? It's Brendan from Market Makers. Senior Frosty melting here in Florida in the heat wave. Guys, a weather update. Yes, we do it all on this channel. So we had a tropical storm form in the Gulf of Mexico, as most people in the South know here in the United States. It's officially, as of right before recording this video, I got a National Weather Alert Service message saying it's officially a hurricane. The projected path is right over my ranch. So I'm inland, like 50 miles, 60 miles inland, but we still get a lot of storms. You could potentially get tornadoes, obviously infrastructure damage like power lines. I'm telling you this because if you don't see a video Thursday, it's because I don't have the ability to connect to the internet, okay? So make sure you understand everything we talk about in this video. I'll try to cover everything just in case we can't do a Thursday video. Maybe I can get a Friday wrap up if everything's kosher and ready and copacetic for a video. But guys, we got to talk about J-Hole, Jackson Hole. Not Jerome Powell, but Jackson Hole. Jerome Powell speaking at Jackson Hole, talking about inflation. Now, he delivered a message this past Friday. His message, people are painting it hawkish, but I don't think it was hawkish at all. We know that the Fed is projecting the GDP to come in above 5.8%. That's the Fed's projection, meaning an overheated, rebounding economy. We know the Fed, let's go ahead and look at the inflation nowcast. The Fed is predicting inflation increasing. Last month, it was 3.2. Look what they have for August. CPI, 3.83. Core CPI, almost 4.5%. If you look at these numbers month over month, you're looking at a 0.80 increase in the CPI and 0.38 in the core. And of course, the Fed's looking at the PCE, which is 63. So all these numbers are coming in hot. Knowing, now again, these are Fed projections, but knowing that these numbers are projected to come in hot, Powell tried to deliver a monotone message in the sense of, well, we're really happy with progress. And then this is what the bulls wanted to hear. We're really happy with progress, but, and he was emphatic. He said, but if the data continues to come in hot, we will have to raise rates again, or we will consider raising rates again. Okay. So if he was hawkish, he would have said, if the data is coming in as hot as we predict, I would expect further tightening, but he won't say something that direct because why, guys? He is a political animal. Remember, he was appointed by Trump, meaning he was going to play ball with Trump, and reappointed by the weekend at Bernie's president, Biden, right? He was reappointed by Biden. To get appointed by two people on opposite sides of the political spectrum, you have to be willing to play ball and you have to be a political animal, and that is Powell in a nutshell. So that's where we are with Powell. The data comes in hot. We could see a hike in September at the end of September for the meeting, or we could see the hike in November. The market's trying to price in, I guess, a 30% chance. I don't know what it is now. I was looking before the meeting. I think it was 33% chance of a November hike. But lots of people are on TV saying the hikes are done and this is it. The problem Powell has is the elephant in the room, the 800-pound gorilla in the room. He won't address the deficit spending by the U.S. We are spending money at a record level outside of the pandemic itself. These are the highest deficits the country has ever run. To give you an idea, in just over the last 2 months, we have spent deficits, meaning money that we don't have, over $700 billion in just over the last 2 months. Now, our current national debt is like $32.7 trillion. To put that into perspective, when Volcker took office in like 79. We had less than $1 trillion in debt, right? I was like 1 year old. He took office in 79. We had less than $1 trillion in debt. In the great financial crisis, we had under $8 trillion in debt. And now we have almost $33 trillion, and we'll finish the year out probably above $34 trillion at this rate if we continue to borrow at this rate. That is guys, you're looking at a 33 or 34x over just since 1980. Okay. And you're looking at a 4x since the GFC. This is why equity prices, this is why crypto prices are still where they are, because this money, it has a stimulative effect. You have an overheated economy. The government's doling out money, whether it's for social benefits, proxy wars. They want another 25 billion with a B, by the way, for that proxy war. So we're spending money hand over fist at a record level. And Powell doesn't have the backbone to go in front of Congress, to go in front of the Senate. And trust me, he's been prodded by Republicans, by libertarians. Why won't you say that we need to spend less money? And he says, I'm just going to stay in my lane. And I'm just going to stay in my lane and not worry about that. He's looking at fiscal policy, monetary policy, but he won't comment on the fact that his job is 1,000x harder if we continue to deficit spend. I mean, it seems like kind of an important thing, right? If you're going to deficit spend, you need to understand the effect it has on the economy, and is producing an overheated economy. Now, the side effect of that will be Powell's only hammer that he has, his only war hammer he has, is to continue to raise rates. The downside, which is a big downside for the American people, is that prices will continue to rise. And remember, the Fed's inflation target of 2% is made up. All right. The Kiwis invented that target. The New Zealand Central Bank invented that target, and it was a ceiling. They didn't want the 2% inflation to get above 2% ever. We use it as a target. Ben Bernanke, the moron, the previous Fed head from the great financial crisis that, by the way, predicted a soft landing on national TV, predicted a soft landing just like Greenspan did in the dot-com crisis. They've always been wrong, but predicted a soft landing. He adopted that 2% number in 2012. So just, guys, it was just 11 years ago. This isn't like it's been around forever. The Fed's been around since, I forget when, 1919, 1913. But this number was just invented. And the problem that you have is the price rises in everything. There's two key components of why price rises for inflation. The main component, inflation, the old Webster Dictionary definition of it was to do what? Inflate the money supply. Too much money chasing after too few goods or services causes inflation. It literally meant to inflate the money supply. That has been, now they're doing these supply side issues with it. Oh, look, there's a conflict, so we have supply side issues. You're not going to get a net benefit of deflation. As a matter of fact, when Powell was in front of Congress and he was specifically asked, are you trying to cause disinflation, not deflation? And Powell said that is correct. Disinflation is just bringing the rate of change of inflation at the time, which was like 8%, to come down to 2%. But what about all the prices that are already exponentially higher? The UN Food Index, the cost index, is at the highest it's ever been. Food inflation is between 15 and 25%, depending what items you're buying. What's going to make those food prices come down? I use my dog food analogy all the time because I have to buy it every week. The dog food I was buying for my dogs was $22.99 or $23.99, depending on the store, prior to the pandemic. And now it's $32.99 to $34.99. What's going to make that price come down 30%? Because inflation drops to 2%? No. Guys, what that means is Powell wants prices to go up every year 2%. So just in a perfect Fed type economy, because we are a debt-based economy, you would have to get a 10% pay raise every 5 years to break even. Now, all of you that are in my age bracket, let's say 35 to 45, do you get a 10% pay raise every 5 years? Because if you don't get a 10% pay raise every 5 years, you're losing money. This is how, like, my parents and my grandparents were able to have a single income household, and somebody was able to stay home and raise the kids. My great grandfather delivered milk. He was a milk delivery man, and he was able to have a home, have a wife with 2 kids, and live a normal middle-class American life delivering milk. Now everybody has to work. Whether you want to or not, to make ends meet, everybody has to work. And that's the debt-based economy that we live in. They want everything to go up. That's the model. They don't want deflation. Why would deflation be bad? Why would deflation be bad? Because then it makes growth go negative, guys. So that's the whole model that we have. But in reality, deflation would be a very good thing. That prices come back down to normal levels, but they don't want that. So these high prices are here to stay, is my point. There's no reason. It's outside of the supply side, which how much is that going to affect it? I think very small amount. There's no reason for prices to come down even once we get to 2%. So if Apple's selling their new iPhone, I'm just going to make up the number. Let's say it's $1,400 for the new fully loaded model that's coming out in September, right? $1,400. Do you really think if inflation comes down to 2% in 24, 25, that price of the iPhone is going to go down 10%? No, it's going to be the same or it's going to be higher. And that's the whole rub. That's the problem that we have, is that the high prices are here to stay and inflation is heating back up. Again, guys, we have to be aware of these things as a consumer because most people aren't saving. Some ridiculous number, like 50% of people don't even have $500 for an emergency in the bank. And you got to be aware of this because things don't look to be getting better. They look to be getting worse. Let's jump into the markets and look what's happening here. Had the J-hole thing, lots of economic data coming out this week. Nothing today, but we got the ADP job numbers, the Bureau of Labor Statistics, the BLS job numbers, year-over-year continuous claims, ISM. I'm missing something else. Oh, PCE. The Fed's preferred measure, right? PCE, inflation's coming out. All that's coming out this week. This looks to be setting up for a very volatile week. We'll look to see how it's affecting in the marketplace. So let's go ahead and do that. VIX, guys, VIX came down, right? Because again, Powell wasn't hawkish, in my opinion, at the J-hole speech. The VIX is at 15.60. Uh-oh. Let's plug this in. 1 second. Sorry about that. We're about to have a power outage on the laptop. So, guys, this is where the VIX is at. And, this should be conducive for the markets to do some type of recovery, but it's still an elevated VIX from where you were, right? So let's go ahead and see how this is affecting the markets today on Monday. The DXY is pretty flat, 104.039. Again, I want to see that come up to 104.699. And I do expect the DXY to continue to rise to maybe 106 is your next level, and then 107. And I do believe rates have the ability to continue to rise. Yields have the ability to continue to rise. And that's for a bunch of different factors, but we're spending money like crazy. And I think there's more rate hikes that Powell will have to do. Now, vast majority of the marketplace participants on TV don't think he's going to do anything. But, I think he's going to unless we actually crash. Looking at the DXY, you're not overbought. You have room to go up. So we'll see what happens with the new data that comes out. That new data, guys, could be very bearish if it shows an overheated economy. This is still the cycle of good news is bad news as far as economic strength because it shows you that the Fed isn't done. Let's go ahead and look at the US 10-year. Now, keep in mind, all of the yields are roughly at the 2007, 2008 GFC highs. Hence the thumbnail, guys. When we had the yields up this high, it puts pressure on the markets. Powell's not done raising rates. Inflation is on its recovery path now, and he has to bring it back down. So you could see these move up. And again, my target is 4.6. I can tell you right now, most people on TV and on YouTube are not telling you that. Most of them think the yields have peaked. They think the yields have peaked because eventually they will come crashing down. Let me show you this on a weekly chart. But let me show you what happens before that happens, guys. So let's go back. So your yields right now, you'll see them, they're at 4.21. Here, just looking at the 10-year, guys. Let's go all the way back to the GFC. All the way back to the GFC. Got to get TradingView to update here. Here we go. 2007, 2000. So you can't see it probably. Let me circle it because the line is orange. This is where you're at right now on current yields. The line is literally right here. And where was this? This is 2008 June. And do you see what happens? Everything in the bubbles, guys, everything comes crashing down. Metals will come crashing down. Everything resets, okay, including yields. So this is why this is notable. Tracking this, you were at the highs before the parabolic collapse in the market, a global financial crash. Be aware of that. And I think these can go up still because that 4.6 will have you testing the base of this higher structure pressure up here, and that went all the way up to 5.27. If we continue to have the Biden administration do this massive deficit spending, you can see the liquidity hold up in the marketplace for longer. And if that happens, Powell will have to continue to raise rates. You have a continually overheated economy, and you're going to have the yields continue to climb higher. Okay. And this is the higher you go, the harder the fall. That's a key element that you guys need to understand what's happening here. Looking at the euro dollar, guys. Euro dollar again, trying to hold a rebound here. 1.08124 is where you're at in the euro dollar. Markets are pretty flat today. Again, it irks me, guys. I know I say it, it irks me. We had this short in the room. What a massive downfall. Can this recover? Again, you still have your larger uptrend here intact, right? You still have your larger uptrend here intact, although you did take out this pivot, but overall your larger uptrend is intact. However, if the data comes out hot, you may see the DXY rise. Why? Because again, projections of further strengthening of the dollar. You also have the Japanese selling treasuries, right? We have the problem with against the yen. So they have the yen. I think I don't have it on my chart, but I believe it's the USD JPY is at like 147 now. And last time we were at these levels, 146 to 150, you had intervention by the Japanese bank. So lots of reasons yields can continue to go higher. How's this affecting the markets today? Well, again, the markets had a nice little recovery going on the Dow specifically. I want to see everything retest the 50 because everything's below the 50. I want to see a retest of the 50. Didn't quite get there. That 50 is roughly 34,677, and you sold off a little bit before it. Okay, so I want to see a retest of the 50 as these may be good areas for potential short entries if they hold as resistance once again. If this data comes out too hot this week, you may see this. Or conversely, of course, if the data is super bad, like manufacturing or continuous claims, you could have the reverse effect and things want to punch through, right? Good news is bad news. Bad news is good news. It seems like that cycle goes back and forth over and over again. Looking at Bitcoin, guys, 3-day chart, Bitcoin is extremely flat here on the 3-day, as you can see. That key levels of 25K, breaking this fractal low. Again, devastation. Once you break that with velocity, with momentum, my belief is you'd be coming to sweep your low, going to 12, 13K on Bitcoin. That is part of the thesis here for what happens in the markets because no market, talking about the equities, has ever put in the bottom before the recession. All that the government can do, the weekend that Bernie's Biden administration can do, is prolong the inevitable. They can keep deficit spending. They can keep pumping this money, handing free giveouts to everybody. But when this gives way, guys, the markets will absolutely crater. Because for them to not crater would require this to be the first time in history the markets bottomed prior to a recession. So looking at this on the daily, Bitcoin, again, just you see the candles, guys. It's just super, super tight, super, super flat. 26,135. Your key next level above you, 27,722, although there's no indication that you're moving up to it at the moment. And the key level below you is at 25K, guys. Till then, you're going sideways. If we even look at this from a Bollinger Band perspective, market makers, Bollinger Bands, let's check this out. See how tight we get here. You're expanded. See, again, you want to see the contraction. You see that contraction? You want that contraction and then get the expansive move. This thing you'd want to see get really tight once again, get really tight to a point, and then you can have your next move incoming, next move down as well. Now, could a catalyst come into the market and dump it or pump it? It could. But in general, this is what you want to see, that volatility compression before the next move, okay? Let's check out the MFI and everything here. MFI, again, you got oversold on Bitcoin, almost at a little double bottom here on Bitcoin. You don't have any squeeze going on yet. Your momentum's still bearish, but trying to recover. Not a lot to report there on Bitcoin. S&P fell out of our outer channel and trying to come back up again, and the market recovery got off of the day's highs. Let's look at this from a Fibonacci perspective. Fibonacci perspective, you're getting rejected at 44.28. Again, these are your projected support levels with your targets, but as you can see, they act as resistances as well because previous supports become resistance, as you can see here, 44.67. So what am I looking at on the S&P? What I personally want to see, whatever this economic data shows, I want to see if we get any volatility with an upside move. Let me show you this. With an upside move to our 50, right up there, and to our 21. Okay, so this is roughly the 44.67. $40 from here. I want to see this come up and contact it, because if we contact this again and look to get rejected, I want to trade this. Okay, so I want to trade this. I want to short this up here in this range. If we contact this and this looks to hold for a top, you're going to have volatility because we can see the bottom of the range is 43.36. You're almost 100 points above that. This could be a nice little trade if this works out, if we get the momentum up there before this data starts coming out, or if the market participants are happy with the data, you could see this happen. So that's the first key area of resistance I'm looking at. That 44.67 is a good area. I want to see if that holds for a potential trade. Let's look at this as well. And what you have on the MFI, you bounce back up. You're under resistance from the moving averages. You're still in the bearish territory. You could be putting in a double top here. Momentum's trying to swing back up to the upside. Again, a little recovery bounce. Let's look at the S&P here on our pivot pattern. Again, nothing new here, guys. We had the pivot. We have a 6% move down, posted a short in the room at 45.92. You got most of that 6% move to the downside if you held it. So if you want to check out our Discord, guys, it's a good segue, a little rough segue. If you want to check out our Discord, look at the video description. We have the link to our Discord there. You can join for free through SimpleFX or BingX. They'll pay for your first month. Download one of those exchanges, message Lee, set up your Discord. All the instructions are in the video description, guys. You can join the room, come hang out with 12,000 like-minded, freedom-seeking individuals. You will have a great time, and I'm there all the time to converse with directly as well. So let's go ahead and look at the NASDAQ. NASDAQ, same story, trying to pump up. What am I looking at on the NASDAQ? Again, I want to see the 50. I want to see the 50 get contacted, what kind of resistance we get here, and really that level above it, 15,318, which rejected you before, okay? You got rejected right at the base of your previous Wyckoff structure. So that was 15,378. Can we get that momentum? Can this data support a move up? We shall see. The VIX is supporting it right now. The VIX dropped. The dollar kind of petered off a little bit. So we'll see if this happens. This whole marketplace, guys, really boils down to, and nobody wants to tell you this because then there's not necessarily a lot of reason to watch people's channels all the time, right? Just watch the DXY, watch the 10-year. If yields continue to rise and the DXY continues to rise, you're going to have market weakness, okay? When they fall, the markets can find support, but it's literally that simple. You can have patterns, trades, entries. That's why I want you to watch your channel. But in general, to know the market direction, look at the yields and look at the DXY, okay? Looking at the Russell 2000, man, you are heavily range bound here, as you can see. I mean, you can see you're just stacking candles, right? So you're at 1874. Again, let's look at the resistance here. Where is your 21? Your 21 is way up there. Let's change this to the 50 and see what we have. Let's do a simple. Let's do a 50 moving average and see what we got here on the Russell. I mean, your 50 is way up. So for the Russell, for me to be interested, guys, I have to see the Russell come up to basically 1910. You know, the Russell, I think for the year is only up 5%. I look at the things that pump more, looking at the S&P, looking at NASDAQ. Those are the things I'm interested in trading. The Russell can definitely break down and move down more, but this is a very tight range, okay? And I want to see this have a lot more strength before I look to put a trade on the Russell. MFI, again, you got oversold. You're trying to bounce back up. We'll see what the Russell does here. Looking at Apple, you got to look at the big 7, right? The magnificent 7. So Apple trying to rebound as well, 179, putting in a double bottom structure, a Gartley type pattern. We could see where this potentially could go to if it continues with upward momentum. Your 1618 is right at 185, which coincides with your previous support resistance line at 185. So you could see Apple, if it gets data, right? Market data that's supportive of a market move, then you want to see Apple move up. If the data makes the market dump, then you're going to see Apple move back down. And you want to watch your low there, your 171, almost 172 low on Apple, right? Let's go ahead and look at Tesla. Tesla bounced right off of our channel, got a nice rebound, and you got rejected right at the fib, 243, guys. 243 rejection, you're at 237.11. Again, this at some point, this is going to break out of this channel to the downside when the data coincides with it. And if you do get a further move up, if you flip 243, then you're watching your 268 once again. And at that point, guys, always looking at macro structures, you have Tesla loves to put in massive double tops, okay? This is the most highly optioned stock, I believe. Well, maybe NVIDIA might have passed it, but this is the most highly optioned stock prior to NVIDIA in the marketplace. A lot of zero-day options on Tesla. So you want to watch Tesla, look at the patterns it makes. It's also conducive as a confluence indicator for the tech sector. French 40 putting on a gainer. So you guys in Europe or in the US or any other countries that like to trade the French 40 or the DAX, watch these indices because you're coming up to a key level up here on the French 40. Let's go ahead and put a tighter fib on this. You just flipped 73.13. Let's see where this could go here. If you flip this, your 1618's at 75.56, puts you back up towards your all-time high, but you got to flip your next peak 74.65. Okay, so that's that next peak. You want to sweep it. And really, before that, guys, you got to look at this structure, the sideways Wyckoff structure that you built, 74.02, which you are rapidly approaching. Why you want to look at that? Because you got an up thrust that dropped you down to less than 7,100. You got a structure on top of this, then you fell down, got another up thrust, dropped you back down to 70.83 again. So you want to see if you get a peak up and then a structure, maybe a double top, something on top of the structure, and then start to fall apart. Because remember, this will move in confluence to a large degree with the US markets. But I like to short markets that pump and find resistance in the economic environment that we are trading in. So I'm going to be watching the French 40 to see where this peters out at. And I'll post a trade in the room if I see one on our Discord. MFI, again, bearish, okay? MFI is still bearish, so this will be a good pump to watch. Let's check out the DAX. DAX also pumping up, 15,822. First level resistance I'm really watching. It's not even at the 382 retracement yet from this decline, but you're looking at your channel that you fell out of, 15,872, 15,982, 16,123 would be awesome if it could get up there. But we'll see. We'll see if the DAX can do that. I'll be watching this in smaller time frames as well. Guys, gold, I'm highly interested in trading gold because of the structure that it has right now. So gold's been, you guys that have been watching the channel know we had our macro triple top, right? The macro triple top, we shorted gold, I believe 2055. We talked about it on the YouTube. You guys had multiple opportunities. I posted the trade in the room. And look at this decline in gold since our short, right? Not that everybody held it this long, but you guys know you can take profits along the way. But if you did, it's a 9% move, 8.80% move. But more interesting here on the daily time frame, you're still showing a lot of weakness in gold, guys. This is your, I believe, 100 beneath you. Let's look at 200. 200 moving average, you're just above the 200. 200's at 1910. And if you look at this, you have your, what is that? The 21 is at 1917. You just got above it. And the 50 is right here at 1930. So what I want to see on gold, where I'm looking at a gold trade, guys, is if gold, and so many YouTubers, especially in the TA space, are really bullish on the metals. Guys, if gold can come up and somehow test the top of this channel and confluence with maybe get to that 618 at 1945, I'm looking for gold to build some type of distribution structure here and break down to go down to its next level. Okay, that's what I'm looking at on gold, because this is a lot of resistance, even right above you at 1932, which you can see you're selling back off again. You're at 1919, you got to 1926. That 50 right at the 46, that could prove to be strong resistance on gold. Let's just do a measurement here of what we could be seeing here on gold. That next level down, guys, on the 1618, I'd be looking at 1834. So that would be a nice, almost $100 drop on gold, okay? And I've put you back at the bottom of the channel, in that range of the channel. And overall, as you guys know, I expect gold to come down to retest its previous lows in the, 1640 range? Yeah, 1640 range. We can cover that in another video so we don't make this video too long. But watch this area with gold at 1932 area at the fib, and right there at 1930 with the 50. You almost tested it today. good area to watch for potential trade. Silver holding up better. Silver, again, had this nice move up. I think it was 6-7% move up, holding up better, 24.26. But guys, you're just, I just threw a trend line on top of this, 24.35. Key resistance, you're stacking multiple daily candles here. Above that, 24.617. Overall, again, there's a confluence with gold and silver. Obviously, as you guys know, with the markets, overall, they're going to follow the market. So I like to look at these things sometimes as lagging indicators, because if the markets do show weakness, sometimes gold and silver will hold up before they leg down, right? That's what can happen. So always looking at these things for potential trades to jump on. All right, guys, hope you enjoyed the video. Leave me your questions, comments, as usual, and I will reply. Hope to see you all in the room, and enjoy the rest of your week. And again, look out for my Thursday video. If it's not there, check us out on X, and I'll tell you what's going on with the hurricane. Take care, everybody.